Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Give us just a moment here to go live on all the different platforms. Today, what we're going to be doing is going through our live rates for today for a few different mortgage programs, and then we're going to be doing our deep dive into CDFI no income verification loans, which is an amazing specialty, a very special loan product. So we'll get started here in just a moment. I see comments coming in there already. Definitely appreciate it. Go ahead and drop your comments there in the chat. But it looks like we are live on all the platforms, so we'll go ahead and get started here. You can keep dropping comments there in the chat. We'll take it off the screen for now, but also feel free to drop any questions you have in the chat as well. And Jose would be happy to answer any questions after we go through our deep dive topic for today. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our live mortgage rates for a few standard programs. Then we do a deep dive into a different loan type. And today's loan type is very special, a CDFI no income verification loan. So we'll talk about that here in a moment. But first, let's see what the rates look like. So Nick, if you're ready, let's go ahead and check out today's rates.
All right. Definitely continues to be good news for rates. So looking pretty good here today. We'll check out the rates for this morning. It is September 12th, just after 11 a.m. Eastern. So all the initial rate sheets are live for today. And we will compare across the programs and compare the APR. If you'd like a full breakdown of the itemized fees that go into the APR, please get with one of our team members. We have 300 loan officers that would be happy to help you out. For the demo today, as we do every day, we'll set up a basic scenario to compare. We'll set up a standard single-family home, $500,000 purchase, $400,000 loan amount. Corresponds to 80% loan, 20% down payment. We'll use an estimated 760 credit score and an estimated 40% debt-to-income ratio. So with those settings, let's open up the rates for today. It's got me on the wrong side. All right. So first option we want to look at is our 30-year fixed conventional, which is what most people think of when they think of a mortgage loan for a primary home. Rates as low as 5.625 today. Final APR 5.915. And again, these are 1-year lows, which is amazing. Now, if for any reason our customer doesn't qualify for conventional, typically the next option we want to present is an FHA option, which allows more leniency on credit issues as well as a higher debt-to-income ratio overall, but does require upfront and yearly mortgage insurance. Rates as low as 4.875 for FHA today. Final APR with all the fees, 5.794. So if our customer qualifies for both, FHA could be a touch cheaper, but does require that yearly mortgage insurance. And our customers that need to use it, definitely very comparable option when you compare the APRs here. And moving on to our VA, only for our eligible vets and active service members, but these programs are amazing. Again, coming in at 1-year lows today, rates as low as 4.99, final APR 5.275. So if we compare across the programs, obviously our VA eligible borrowers are going to want to choose a VA program as the APR is much less when we compare across. And moving on to our final standard option here, USDA is only for USDA eligible areas. That's the rural areas of the country. If the property is eligible and our borrower is eligible, this is a great option to consider. Rates as low as 4.875, final APR with all the fees, 5.586. So if we compare that to an FHA, which is usually what one of our customers shopping in those areas will be doing, USDA is going to be a touch cheaper and a touch cheaper than conventional as well. So definitely a good option for those rural properties. That rounds out the standard options that every bank or lender has. But if our customer doesn't qualify, unfortunately, other banks or lenders have to deny them. That's where we love to present our 5,000 additional options, starting here with 30-year fixed non-QM alt doc options for a primary home. So if our borrower doesn't qualify for conventional using tax returns, etc., needs to switch to alternative docs, such as bank statements, 1099s, P&Ls, and similar, this is our alt doc program. Coming in today, rates as low as 6.125 for a bank statement or similar. Final APR 6.450. So when we compare that to conventional, we're always usually within about a half a point just to switch to alt docs, which is great for our borrowers that need to switch. Very comparable options here. And we love to help our borrowers that need that extra help. And our alt doc options for investments, tons of flexibility once we get into investment properties here. So first up, our alt doc bank statement are similar, coming in at 6.625, final APR 6.951. And we'll compare that to our other investment options. Remember, there are no government options, so no VA, USDA, or FHA, but we do have our conventional option for investment properties. Coming in today, 6.375 rate, final APR 6.710. So that's beating our alt doc option, but not quite beating our favorite options here. The DSCR stands for debt service coverage ratio. No income information or employment information is needed. Simply use the estimated rents from the appraisal to determine a DSCR ratio. The estimated rents can cover the estimated expenses, aka the property will cash flow monthly. That's a ratio of 1 or higher, which is preferred. For the demos here, we put a ratio of 1.5 so we can see all the programs. With a 3-year prepayment penalty, which is standard, we're coming in at 6.25 right today. Final APR 6.516, so a touch cheaper than conventional. Absolutely amazing. And we can sweeten the deal with a 5-year prepayment for some of our programs, and that comes in today at 6.00. Final APR 6.321, beating conventional with the DSCR is absolutely amazing. And the final DSCR option we have is a no prepayment penalty option, as some states do not allow it, and some investors prefer not to have it. Looks like this updated recently, which is great. Rates as low as 6.625 today. Final APR 6.951. So just a touch higher than conventional. So I'd say most, if not 100% of investors would still choose a DSCR when we're within this 0.2 here, 0.25 of price. And the final two options we always go over here that show up on the screen are 30-year fixed second mortgages, especially as rates have been higher than typically in the last few years. These are great options as our customers that have a low rate first mortgage don't want to touch that first mortgage, but still want to get some cash out. Traditionally, a HELOC is used, but we have now our 30-year fixed second mortgage options for a primary home with rates as low as 8.125, which is lower than a HELOC, and it is fixed rate, which is superior than a variable rate typically. And final APR 8.527 to get that cash out of their primary home without touching that first mortgage. And these are non-QM programs, so we can use bank statements and similar. And same option for our investors. HELOCs are very rare for investment properties, so this is a great option to not touch that first mortgage and get some cash out. Rates as low as 9.5, final APR 9.739. Now, let's get into our very unique options today, which is CDFI, no income option. So as Jose will explain, these are typically what would be illegal, right, types of loans to do. But now the government has assisted our borrowers that need to use these programs to do what would otherwise be illegal. So Jose explained how we can get around this and how we can help our borrowers that need that extra help in this case.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. So first, let me get into what CDFI stands. And I'd also like to state, if you really want all the details, make sure that you tune in to the training that we're going to have today at 12 Eastern Standard Time on CDFI loans. But CDFI stands for Community Development Financial Institution. Now, this is a financial institution that provides financial services to low-income communities and underserved populations. So there's a specific term, CDFI eligible, right? When a borrower is CDFI eligible, they will receive a 0.5% lower interest rate than other borrowers that are going to apply for the program that aren't CDFI eligible. It is open to all members of the population. However, CDFI eligible borrowers, which would be Hispanic borrowers and African-American borrowers, are the ones that are going to receive a 0.5% lower interest rate. And as Nick mentioned, this program actually does allow us to break the law, the Dodd-Frank Act, which states that primary and second homes have to exhibit an ability to repay. This loan does not have ability to repay requirements because of the nature of the loan, trying to have as wide of a lending footprint as possible. However, there are some controls. Obviously, It is maximum 80% loan to value, and the reserve requirement is as high as 12 months or as low as 9 months, depending on the loan to value. So let's go ahead and share the examples that I have for you today. Yeah, first example is at our maximum credit tier 740 or above. That is what you need for the best scores. Actually, 720 will still get you an 80% LTV. It's just going to be a lower, little bit higher cost to the rate. So at our best tier here, 740 or above, we do have a 9.125 is our rate, and the cost is 2 points. There are a couple of additional options at a little bit lower cost and discount fee, but higher rates. So I'm trying to keep it uniform all across the board here at 2% charge on the options that I'm sharing. So that is our preferred credit. Then our next credit tier down at which the LTV drops is 680. Well, 680 is the minimum credit score for 25% down. So 680 to 719 actually will get you 75% LTV. And in this scenario here, you're looking at a 9.625 rate at the same 2 points loan discount fee. So again, 680 to 719 will get you 75% LTV. And I'm quoting these all as CDFI eligible borrowers. And our lowest credit tier would be 660 to 679 here. It is a 35% down payment, 65% LTV, and you're looking at 9.5% interest rate and 1.75 points for our 65% LTV purchase. And now for our 3 refinance options, our top tier here is 740 plus. Now this option does require a 740 or above credit score to get the maximum LTV of 70% for the cash out for this option. And here we have 9.25 is the rate at a cost of 1.75 points for our 740 plus borrower. And again, reminder, 740 is the minimum credit score for the 70% LTV option. And now if the score is between a 700 and a 739, 65% LTV is the maximum LTV. And we're looking at 8.875 is the interest rate and 1.75 points loan discount fee for 65% LTV with a minimum 700 credit score, cash out refi. And our last option is at our minimum credit score of 660. 660 again is the minimum credit score for purchase and the minimum credit score for a cash out refi. 60% LTV is the maximum LTV here for this cash out refi. And we're looking at 9.5% interest rate at a cost of 2 points. So do remember, this program is applicable for primary and second homes. The second home interest rates are exactly the same as the primary interest rate. So very good product. Borrower relocating, borrower lives outside the country, not reporting income in the U.S., wants to buy a second home in the U.S., that's a perfect solution provided by the CDFI loan.
All right. I don't see any questions. Surprisingly, I don't see any questions, but definitely a unique, amazing program there. But no questions, so we'll go ahead and wrap it up. Remember that we do this at 11 a.m. Eastern every morning, where we go through our live rates and do a deep dive into a different